Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that's a bit like a plot twist in a car commercial but with numbers. Get ready to decode TrueCar's latest report because it's got a correction and we're here to explain why it matters. So right off the bat, TrueCar filed a correction to their report and the only reason is to fix a date. Yes, it was just a typo on the signing date from the accounting firm, but you know how the SEC is. Gotta get it right. So this new filing is really just a copy with a date changed. Let's look at how TrueCar makes sure its numbers are accurate. They've got something called disclosure controls and procedures. Basically, it's their way of making sure all the information they report to the SEC is correct, on time, and gets to the right people inside the company, including the CEO and CFO. And for the period that we are examining, they believe everything is working well. Management also stated that they are responsible for the company's financial reporting and the processes behind it. And a Big Four accounting firm audited their internal controls, which is a good sign for investors. Speaking of accounting firms, PricewaterhouseCoopers gave TrueCar a thumbs up on both their financial statements and their internal controls. So both TrueCar and PwC believe things look accurate and trustworthy at the company. Let's dive into TrueCar's balance sheet. At the end of the year, they had about $112 million in cash. Now, compared to the year before, that's a bit of a drop from almost $137 million. When looking at debts, what they owe people, TrueCar has about $33 million in current liabilities, which is slightly higher than the almost $29 million from the previous year. Overall, TrueCar's total assets came in at almost $160 million, which is less than the $204 million the previous year, and this drop is due to some restructuring that got rid of assets and some debts that are on the books. Okay, let's check out the income statement. TrueCar brought in about $176 million in revenue, which is a win compared to the roughly $159 million the year before. But here's the thing, their costs were pretty high. After subtracting all the expenses from the revenue, TrueCar ended up with an operating loss of almost $37 million. On a per share basis, this resulted in a loss of 34 cents. This is not good, so let's examine why. The cost of revenue, like the fees they pay to data providers, was about $26 million, much higher than the prior year. Then you add in sales, marketing, tech, development, and general expenses. So to cut costs, TrueCar is trying to operate with less real estate, which resulted in a $7 million loss. A lot of the filing's components are boilerplate, like legal documentation and descriptions of stocks and policies and procedures. They seem to be leasing a lot of office space. With many amendments to those leases, it might make sense to cut back to save costs, as we noted before. The company has downsized real estate and there have been some subleases with new tenants. The trend of saving money with less real estate is a good sign for investors, but also indicates that they are a bit smaller of a company in comparison to previous years. We can note a few employment agreements, and as an investor, you want to make sure executives are motivated and incentivized well. It's also great to examine who they are and what position they serve at the company. There is also a file showcasing the company's insider trading policy and other ethical considerations. Subsidiaries are listed such as TrueCar Dealer Solutions, Digital Motors, and TrueCar Wholesale Solutions. The auditors communicated that revenue recognition was a critical audit matter because there was a high degree of auditor effort in assessing revenue. PricewaterhouseCoopers has been the company's auditor since 2009, so TrueCar has had the same accounting firm for 15 years, which can bring some trust. Looking at the comprehensive loss, cash flow, and equity, the company has been reducing its shares from repurchasing stocks. Now, for my overall take, TrueCar is at a pivotal point. Revenue is up, which is great, but they're still wrestling with losses. The leadership seems focused on efficiency, trying to trim costs where they can. They are sitting at the same accounting firm since 2009 and seem to have robust internal controls. As always, I would advise caution when investing and be sure to do your own due diligence. One interesting thing to note, TrueCar needs to work hard to understand the data they are receiving from dealers. A lot of their process of revenue recognition is based on estimates and third-party information. investors would be wise to confirm whether these processes will impact TrueCar in the future. Based on these insights, a reasonable price range for TrueCar might be somewhere between $2 and $4.50. I would lean towards a neutral to bearish outlook, meaning there's more potential downside than upside in the short term, but it's not a strong recommendation. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, give us a thumbs up and hit that subscribe button so you don't miss our next filing deep dive.